Everybody, what's going on? It is James here, and I wanted to sit down and shoot a fast video. It is October 22nd, and if memory serves me, I have not shot a YouTube video, at least one that I edited and uploaded, since September 27th. So I wanted to sit down today and do a quick update, and also share some news with you about some Bitcoin that I finally purchased. So before I jump into this video, please do me a huge favor, hit that thumbs up button. Make sure to subscribe to the channel. And of course, do not forget to check the description. There is a link down there where you can join Patreon for just $7 a month. All right, so first things first, I'm going to get this out because I got a good laugh out of this. The world is a funny thing, right? And sometimes we can have great things happen to us out of almost sheer luck. And one of my big pet peeves is when people don't realize that they got their lottery ticket punched. And so on this channel, I've talked about this in the past, how there are obnoxious bulls who were not using proper risk management, who were, gambling with money they couldn't afford to lose. And because the market went up, to 65, 66, 67,000, whatever it's been, they've gotten paid for that really bad behavior, and they think they're smarter than what they are. And typically what happens, this mindset, this is what leads people to go to a casino with, say, $500. They might get up 10 grand, and when they go home, they have nothing left because they refuse to book profits and go home. So we see that a lot in cryptocurrency. And I'm not picking on people. It's just the way human beings are in general. And I was no exception to this rule in 2017, although I did realize I got lucky, which is, I guess, a small exception. In 2017, I made a ton of money with a small amount of money. And then I just assumed that anytime it went down 20, 30, 40, 50%, that it would immediately go back up. And so I didn't use stop losses in my longs, and it worked great, and I was up thousands of percent. And then the bear market hit, and of course things went really bad. And I know people will say, well, Bitcoin's up. If you held it, you're fine. That's true, except it wasn't just Bitcoin I was buying. I was buying altcoins as well. And a lot of altcoins today are still down in a big way from where they were 3 or 4 years ago. So the reason I'm talking about all this is because over the last 4 or 5 years, I've told people again and again, one of the simplest ways to make money with cryptocurrency is by putting what I call stink bids on the exchanges, in the hope that there will be some kind of flash crash that buys these dips and you can make a quick buck overnight. I've done this time and time again. At this point, it's put multiple six figures in my pocket. The last time I did it, Ethereum had dropped from, I think, 17 or 1800 bucks. It fell down to I want to say it was like 700 bucks that I got filled at. I think that was over on Kraken. It was right here on this crash, if I remember right. Let's go back in time. Yeah, there it is. Hang on. So this came all the way down, filled me at, it fell down to 700 bucks. I think my bids were a little higher, like 750, 800, something like that. Got filled and then immediately went back up, and I made like $1,000 per Ethereum. And no, I didn't hold them. Should I have held them? Yeah, I probably should have, right? But I was like, you know what? When the universe gives you a gift, don't look a gift horse in the mouth, take the gift and run. So I immediately sold the Ethereum that I had bought on the dip, made a nice little chunk of change, and moved on, okay? So why am I talking about this today? Well, because I was having carpet installed in my house this morning, and I wanted to sit down real quick and just check my portfolio because Bitcoin's looking a little weird, kind of double toppy-ish, which we'll talk about in a few minutes. And I wanted to check my portfolio. So I log in, and my portfolio is completely different from what I'm expecting in a good way. And I think, okay, well, something's going on with my tracking software, something's goofy, what's going on? And I noticed that I have a lot more Bitcoin than what I'm supposed to have. And I'm like, okay, well, where's the bug at? So I'm looking, and I noticed that the software says that I bought a bunch of Bitcoin yesterday. Now, this is news to me because I didn't trade yesterday. So I'm kind of going, what? And then I noticed that it says I bought Bitcoin at $8,897. Now I'm really confused because I'm like, I know Bitcoin wasn't $9,000 yesterday, right? Right? I mean, if I look at a Bitcoin chart, it wasn't $9,000 yesterday, was it? No. Oh, yeah, it was. If you haven't seen it, on Binance.us, there was a flash crash on Bitcoin that lasted less than 60 seconds, and Bitcoin crashed from 65,000 yesterday to $8,200. And guess who bought a bunch of Bitcoin? Yep. And I find a little bit of irony in it because I've had so many people tell me that I would never be able to buy my Bitcoin back for less than I sold it for, right? I've had so many people tell me how stupid I was for having bids under $10,000. Bitcoin would never go under $10,000 again. And I get their point, right? Maybe it doesn't go under 10,000 in a normal way. I'm not so sure about that, but who knows, right? But I found a little bit of humor in the fact that I got my bids filled at $8,900 or whatever it was. And just to be fully transparent, I'm going to pull up a screenshot of the order so you know that no, not every order was filled at $8,900. This was the actual orders that filled yesterday. I had a staggered series of what I call stink bids. And the way these bids work, and the reason I'm sharing this, other than I think it's a little humorous, the reason I'm sharing this is because I'm telling you I've literally made multiple six figures in less than 5 years just with this one strategy, right? Not counting everything else I've done. And the way it works is I will typically set bids 50 to 80% below the price of a coin or a token, and I will kind of stagger them out in a grid, kind of a martingale type of strategy. For example, my top bid was at $25,111. There was no stop loss, okay? If this had filled and went all the way to zero, it would have really sucked, but I only put in money that I could afford to lose, right? And I felt like the risk was very minimal at 25K compared to the upside. Doesn't mean I want to buy $25,000 Bitcoin and hold it forever. Not necessarily. These are trades, right? I want to buy it if it flashes down to 25 and then I want to sell it on the bounce. Well, it filled that, kept going down. A few seconds later, filled this one at 21,000. A few seconds later, filled this one at 18. A few seconds later, filled this one at 15. A few seconds later, filled this one at 12. A few seconds later, filled this one at 11. And a few seconds later, filled this one at 8,897. And there was only one order that didn't get filled. I had an order to buy at 7,060, and I think it was 7,060. It might have been 7,001. Whatever it was, low 7,000s. I've deleted the order now. It was low 7,000s, and it didn't get filled because it bottomed at 8,200. But it went down, filled all of these. OMG did the same thing, and I'll tell you a story about OMG in a second. But Bitcoin filled all of these, and then literally within 60 seconds was back to $65,000. So in less than 1 minute, I made a 500% return, and these were not small orders. They weren't massive orders. They weren't like, okay, I made $1 million off of it, but I did really well off of this, right? And guys, it was dumb luck. Luck. This is not skill. It's a strategy. It's a strategy that I've talked about for 4.5 years that's treated me very well, but it's dumb luck. And it's really no different from somebody who bought Bitcoin on a whim and ended up making a bunch of money because it went up to 60 grand. I literally went into my Discord and said, guys, I won the lottery on Bitcoin. Because that's what it was. It's like a lottery ticket, right? Just a dumb luck sort of thing. Only a lot less risk than a lottery ticket. Because lottery ticket, you're almost guaranteed to lose, right? Whereas with this, if they filled, I was almost guaranteed to make money. And in this case, my cost average, just so you know, as the price got lower, the order size was larger. And so the cost average after all these buys was about $12,000 per Bitcoin. So yeah, it went back up to 65K. And at this point, I've sold half of it. And I'm still holding half of it to see what's going to happen. And then on OMG, I had sold OMG last week or the week before. I don't remember now. And I had sold it for an average of like $15.42 or $15.43. And then I just put in a stupid little bid here at $5.13 and say, hey, if it drops to $5.13, buy back everything I sold. And it went down to $5.13 yesterday in a flash crash. Immediately went back up to $14. And this is not skill. This is not, oh man, I wish I knew how to read a chart, or I wish I knew, technical analysis. There are so many ways to make money with cryptocurrency that are very, very simple, and most people just ignore it. They ignore it. For example, I made a truckload of money off of arbitrage, where I'm arbitraging coins from one exchange to another. It's not a trading thing. It's not like you've got to learn technical analysis. It's pretty dead simple. Hey, look, this coin is cheaper over here and more expensive over here. I'll buy it here and sell it there, right? And if you're wondering, well, that doesn't work because you got to transfer it and all that stuff. Yeah, that doesn't work like that. The way you have to do it is you have to actually have the coin first, right? So let's say, for example, and I've taught this in the past, one of my old videos had like 350,000 views, and it was this video, and I ended up taking it down because it had some personal information in it. Let's say that you have Ethereum. Let's say you've got just around 5 Ethereum, right? Whatever it is. And you've got 5 Ethereum sitting on Coinbase, and you notice that Ethereum is cheaper on Binance. Well, what you do is you buy it over on Binance and sell it on Coinbase almost simultaneously. You buy here and sell here within a few seconds of each other. And then if you want your Ethereum on Coinbase, you just transfer it over. And there you go, you're done. And that's what I used to do a lot of. I did literally hundreds of those types of trades. And it's still good. It still works. I've done it in 2021 some. But back in 2017 when I first taught it, there were often 10-15% spreads between exchanges. I would be buying Litecoin at one at like 200 and selling it at like 220 on another site. Really simple stuff. This stuff where you catch flash crashes. Really dead simple stuff. If you are bearish on Bitcoin, one of the things you can do instead of just selling your Bitcoin, for example, you can go to a site like Bybit if you're able to trade there, and you can short Bitcoin. And because of the way funding works, a lot of times you're actually getting paid to short Bitcoin. And that's better than just selling your Bitcoin. It also could be some tax benefits. You'd have to talk to a tax professional about that stuff. If you're holding Bitcoin or you're holding crypto and you absolutely refuse to sell it no matter what, there's lots of sites out there that will let you stake your crypto and earn pretty decent, APYs, like 5%, 8%, 10%, etc. There's all these ways to make money. One of the things that I taught in 2020, mid-2020, along with one of my former students who became an amazing trader, right? And he taught me a strategy that I'd never seen. And then we taught together other people, was this funding strategy that we taught, where we taught people how to take out hedged positions and make a full-time income just off of funding payments. There's no trading skill required with that. It's a very black and white strategy. So my point being, don't fall victim to the idea that there's only one way to skin a cat. And also, don't forget that sometimes it's better to be lucky than good, right? Because again, these bids getting filled, pure luck, nothing else, just luck. All right? As far as Bitcoin and what Bitcoin's doing, I'll try to keep it short, but I do want to talk about this. So I had done videos, long story short, most people watching this channel know this. I had said that I thought this was going to be a dead cat bounce, that it would go down, that it would go to 50 to 55K. Then I changed that to 45 to 49K, and then I thought it would go down. Okay? Obviously, that's sort of what happened, but things changed. So we're all good through here. We don't even talk about all that. Starts to come down from this level, right? It moves down about 25%. But the last video that I did on September 27th, one thing I said at the time we were right around this candle, I said, you have to watch this chart because this could be, I think we were right here, okay, September 27th, this could be a double bottom forming. And I said in that video, if price takes out $45,000, which was the neckline of the double bottom that seemed to be forming, that you didn't need to wait for it to go here, and you didn't need to wait for it to go here, and you didn't need to wait for it to go back here, that if it took out this level, it was likely going to go much higher. Well, it did take out that level and ran up 49% past it. A beautiful, beautiful, beautiful long setup. Period. Doesn't matter what you think is going to happen. When you get a signal, right? I thought this was going to go here and then go down. When this happened, I had to change from bearish to bullish because the chart said so. The chart disagreed with me. Of course, the ETF news broke and that sent it even higher. It actually ended up taking out the all-time high and printing a new all-time high up around $67,000. Okay? Now, here's what I would warn you about. Okay? Be very careful assuming that this is just a bull market and that this was a correction and this is going to go to 250,000 or 100,000 like a lot of people are predicting it will. It very well could. By the way, this white line's nothing. It was just an alarm I had set. It very well could go past those levels or to those levels, but there are some striking similarities to 2017. So I just want to point these out. In 2017, in early December, December 7th, price ran up to just shy of $20,000. It crashed, put in three tails, and then, of course, the CME was launching its Bitcoin futures, and that was right here on December 17th. It put in the all-time high on December 17th, was very close to double top, and then the bear market kicked off. So think about this. Top, three big tails, double top on CME News, so buy the rumor, sell the news, bear market. All right, you ready? Top, three big tails, double top on ETF news, because now there's a Bitcoin ETF. And what comes next, I don't know. But this is strikingly similar to December of 2017. So it's something that you need to be aware of. It could very well end up being a buy the rumor, sell the news event. Do I want that to be the case? Absolutely not. Especially not now that I just loaded up on Bitcoin. Again, I sold half of that already. I've already booked profits on half of it. Even if the rest of it went to zero, I'm going to come out smelling like roses. All right? But I kept half of it, so if it goes up, make a pretty good chunk of change. So I'd love for it to go up. But this is a bit concerning, okay? And it's concerning because, it's leaving this wick right now. There's 9 days left in the month, so we'll see. But the way it looks, the way it's comparing to 2017 in a fractal sense, the fact that it pumped on that ETF news, and the other thing that makes me a little bit skeptical of this is we have a candle, a monthly candle that pumped almost 53% in this month so far in October from open to high, and the volume is okay, but for a move like that, you would expect big volume, right? This is not big volume. So maybe that changes over the next 9 or 10 days. But volume's kind of average for a candle that's absolutely massive. Okay, this is a massive candle. It's one of the biggest candles since 2020. Okay, look at this. This candle here was about 76% in February, but it closed about 36%. This candle here in March was about 36% and closed at 30%. Well, this candle pumped almost 53, and right now it's 37%. It's a really big candle, okay? So that's something to be mindful of on the monthly chart. It's not necessarily bearish. It doesn't mean go take a short position, right? It's just something to be aware of. That's all. That's all you can really say about it. If you look at the weekly chart, the weekly did put in a really nice buy setup back here. So there's a couple reasons to be looking for longs. This is my Bitcoin daily chart, but I'll just change some stuff around so we can use it. Remember, the 19-week moving average is an average that I've talked about for a number of years now. I talked about it last year, for example, in 2020. I was telling people, my fellow bears back there were super bearish, and I was like, I wouldn't be shorting here, right? It looks like it's going to bounce. I thought it bounced 11.1K and then probably go down. It did, went to 11.1K, came back down to the moving average, and then boom, completely just blew my mind. Basically had a couple of demand tails side by side, tweezer bottoms, whatever you want to call them, right on that 19-week moving average. Look familiar? Same thing right here. The last long that I took on Bitcoin was actually at $40,800. And the reason that I took it, well, unless you count yesterday's luck box play, the reason I took this long back here was actually because I was being aggressive. It was retesting that moving average. It says 41,200, but that's because the candle closed up and the moving average shifted. But when I took the long, it was right around $40,800, and so I took it, and I had to stop back here at the bottom of this candle, and obviously that worked out. It was a bit of an aggressive play. It was probably more aggressive than what I should have been, but we had the 19-week moving average. We had this tail here. We had a 50% retracement on the move itself, right back down to that 50. And we also had the fact that this was really just retesting the top of this range. So I felt like all that together was a sign that this was probably going to go up. I didn't think it was going to go up to 65K, right? I didn't know how high it was going to go. I didn't really have an idea in mind. The only thing that I thought was maybe it would play out and hit like these fib extensions up around 63K, or if you drew them from back here up around like 64K. I thought, okay, maybe this thing double tops, right? And that's, so far, that's what it's done. So again, it doesn't matter whether you're bullish or bearish. You just got to trade the charts, and this was a bullish setup. Just like on the daily, the double bottom was a bullish setup. Broke through that neckline. Those were all reasons to be long. Okay, on a 3-day chart, not really saying anything different. Pretty much same in line with the weekly and daily. This candle here, this kind of shooting star type of candle, that is a reversal candle. So we will see if this ends up being topping candle or not. Very well could be. I will say this: it's tough to say if it's really bearish because it could just need to cool off, right? But it would be interesting if it could take out the top, because if it takes out the top, the all-time high. Whoa, come on, TradingView. If it takes out the top, that's a sign of real strength on the part of the bulls, and things could get very, very interesting. So we'll see. Volume wasn't bad on this 3-day candle. All right. The problem is when you look at a 3-day candle like this, or any candle, and you see a green candle and green volume, it's like, oh, look at all that buying volume. It wasn't buying volume, right? Look at the candle. It opened here, went all the way up here, and retraced almost 100% in a single candle. It went up and right back down. That is a bearish candle. And although this is green volume down here, the reality is most of that volume was selling volume. That was people selling. If I went into a smaller time frame, you'd see a lot of selling going on inside that wick. All right, so that's something to be mindful of. Daily chart, other than the double bottom, which we don't care about now, but it's good to remember for the future. We are really far off that 200 moving average again. That 200 moving average is down around 45K. So those things tend to act as magnets. And more specifically, the 50 moving average on the daily is pretty important to watch, and it's way down around 50K. All right, so we've really jumped up off of those, and you can see here that the market likes to retest its 50. All right, so something to keep an eye on there. As far as RSI goes, RSI is RSI. Doesn't really mean a whole lot unless you got divergences. I don't see any divergences here. It just looks like it went up to almost 80, and now it's pulling back some. So there's really nothing there on the daily. On the 3-day, obviously we broke out. It's not on this chart, it's on my other chart, but we broke out of the bear market box. We did find support right at the same level that we found support in September of 2020, right? Bounced up, went overbought. So we'll kind of see. I'm not seeing any, unless I'm just overlooking, I'm not seeing any bearish divergences or hidden bearish divergences or anything. So, not really seeing anything there. And weekly, I'm not really seeing anything there either, right? You've got a higher high in RSI, higher high in price, so no divergence there. I guess technically, you could say that this was a lower high in RSI, and this was a no, you can't either. Back here, goofy, right there. You could technically say, well, this was a higher high on the weekly chart and a lower high on RSI, and that would be fine. That is bearish divergence. I don't particularly care about it. It's so far apart. It's kind of like, what I think is happening right now, okay? What I think is happening is I think the market's just ranging, okay? I think that this is the top of a range and this is the bottom of a range, and the market's doing this right here. Now, this could be a couple different things. This could be an accumulation range, right, where you go up, you accumulate, and then you continue further up. If this is, for example, the tipping point where, Bitcoin becomes mainstream, that could be what happens. The inverse of that is this could be a distribution pattern. When I posted on Twitter about Wyckoff, let me pull that up. All right, so this was back in April where I thought the move up to 65K was the UTAD, and then we would move down. And that's literally what happened. We moved down, we got the retest around 59K, and we moved down. But if you look at this is on a daily time frame, right? In fact, this is a 12-hour chart. We could actually be, right, this move down to, the first move up to 65K or whatever could have been, the buying climax back here. And the move down to 30K could have been, the sign of weakness, the beginning of phase B. And this move up to 67K could be the upthrust, which means that if it was, we would get another pullback, maybe another pump, right? Maybe pump it up to, 80K, 100K, whatever it is. And then finally enter the markdown phase when the market goes down, 80, 85%, right? It could be what's happening. I don't think we have enough information right now to even say it's likely. I'm simply saying it's possible. That's what I'm saying. It's possible. All right. Right now, what we have is a range. And the way that I want to play a range on a 1 minute chart is I wait for the range to break and I look for certain conditions to be met, and then I play the range break. If it breaks south, I short. If it breaks north, I long. Well, right now we're in a range. So it's a weekly range, but trading doesn't change on the time frame, right? Only difference is if you're trading a weekly chart, you're probably taking a swing trade or a position trade. And if you're trading a 1 minute chart, you're probably taking a day trade. By the way, interesting side note, I don't normally trade 1 minute charts in crypto, only in stocks, because in crypto you get the ridiculous fees. But with the Bitcoin ETF, if it is what I think it is, I haven't traded it yet. It's not on the main stock broker that I use, but it is on Robinhood, so I'm going to put some money in Robinhood and kind of mess with it a bit. But if it works the way that normal stocks work and the way that I believe it should work, and there are no fees, I will suddenly be able to trade 1 minute charts on Bitcoin, which would be kind of exciting, right? No fees automatically adds thousands of dollars a month to the bottom line for most professional traders. It's a huge deal. So I'm pretty excited about that ETF. I don't know if it's good for crypto. I don't know if it's good for Bitcoin, because a lot of people like me, why would I trade Bitcoin and pay a bunch of fees when I can just trade the ETF? So it may be, hurt liquidity some, but I don't know. We'll see. I'm pretty happy about it. That's all I can say. But as far as Bitcoin goes and trying to pick a direction and things like that, I just would say that right now it looks like it is in a range. It's at the top of the range, so it could be that it's bullish still, but has a pullback, has a little bit of a cooling off period. Maybe goes back down and tests this level down around 52K or so, and then maybe breaks out of this range, okay? Or it could be that this ends up being a double top. We don't know. And I think the reality is who cares? Doesn't matter, does it? I mean, obviously it matters at the end of the day if you don't do anything. But if you're trading it and you're a trader, which is really what this channel has always been about, is trading, it doesn't matter where this is going. What we want to watch for is we want to watch for a proper setup. We want to watch for a proper entry. And if the market signals that we should be long, then we should be long. And if the market signals that we should be short, then we should be short. But as far as sitting and trying to guess whether or not this is going to 100K or 250K or whether it's going to 10K, it's nothing more than a guess. I had a friend of mine call me the other day, talked to him on the phone for a few hours. He has a friend who's telling him that he should be buying Bitcoin at, he was telling him at 65,000 he should be buying Bitcoin, and that it didn't matter if it went down because it'd be $1 million someday. Do I believe that? No, I don't believe that. But I don't know. I didn't believe Bitcoin. I used to think Bitcoin would be 72,000 by 2022, and it looks like it may happen. But if you'd asked me a year ago, I didn't believe that anymore. I had changed. I went from thinking it was going to 72,000 to, thinking that it was probably going below 10,000, So, I don't know. I guess in many ways, the longer I do this, the less I care. And I'll be honest, guys. One of the reasons I stopped doing so many videos, I never really cared that much to begin with. Right? I never cared. I remember doing videos a few years ago and saying, I don't care where Bitcoin goes. I'm a trader. I'll trade it either way. Right? I've got my HODL fund and I've got my trade fund. I think I started caring more and more because people were so malicious and so, there's so much animosity toward me for being bearish, which is ironic when you think about it, because most of the animosity came in 2019 when I was dead on. I literally said, right? I mean, I hate to beat a dead horse here, but I literally said I sold all of my Bitcoin. I think it's going to 35 to 4,200. This is in 2019. After it goes to 4,200, I think it's probably going to 52 to 75,000 by 2022. And I told people, don't hate me for being bearish. Love me. If you're a bull on Bitcoin, hope and pray that I'm right, because you're going to get a chance to buy a bunch of it. And then when it goes up, you're going to get a chance to get mega rich, life-changing money. and people hated my guts for it. And then I think my ego got involved to where it wasn't even about making money or not making money, because at the end of the day, I was trading the whole time. It was about being right. It was about proving these people wrong, these obnoxious bulls, or what I called the crypto Kool-Aid drinkers. It became more important to me that I was right and they were wrong than anything else. And then I got branded a bear, a perma bear, and people started saying things like, I'll short Bitcoin when James turns bullish. Well, then that messes with you mentally, because you're like, man, I don't want to look like an ass. I don't want to turn bullish on this thing, and then it automatically go down, and these people come back and be like, oh, ha, 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 James is the greatest counter indicator ever, right? And it starts messing with you. And then you get married to this bias, and you start ignoring things in the charts that are very obvious in hindsight, especially. So as I've kind of stepped back from doing all the videos and stepped back from social media and just focused on my own trading, number one, I've made a lot more money. Number two, I feel a lot less stressed out. And number three, I had the epiphany that my bias had more to do with my ego and being right than it had to do with anything else, and proving people wrong. And the funny thing is, guys, I posted something bullish on Facebook a few weeks ago, and I had bears who had been following me for the last few years talking shit. Madder than hell that how dare I post anything bullish about Bitcoin. And in 2019, the same thing happened. I remember at one point, toward the end of the year, when Bitcoin had started to go back up, I think it was 8 or 10K at the time, I had done a video, and I was still bearish, but I said, look, I may be wrong, this may be what's happening, and I laid out like a target, a bullish target. And I remember this guy just went nuts on me in my YouTube comments, just talking mad shit, about what a fraud I was and how I didn't know what I was doing, and Bitcoin was a worthless piece of shit, and it was going to zero, and he was riding his short, he had no stop, and blah, 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 blah. Simply because I disagreed, and the funny thing is I didn't disagree. I was still bearish. I was still looking for 4K, but I said, look, maybe I'm wrong. Maybe this is what's happening. Maybe it's actually going to go up from here. And that made him mad. Last week or the week before on Facebook, when I posted something bullish about the Fibonacci extensions, right, and I targeted up around 63K, a guy came in there and got super mad, started telling everybody I was a fraud, and then blocked me. I'm like, bro, calm down, So it just kind of made me go, why am I even doing these videos? I don't make anything off these videos. I think I make like $50 a month AdSense, And I'm just sharing this with you because I know some people are like, where did he go? Like, what happened to James? James used to do videos every single day. And I did for years. Every single day I did YouTube videos for fun. That's it. And I had fun until I was bearish in 2019 and people started hating me for it. And then I became, embattled with this, I was like the bearish, pillar of hope. Like, if you were bearish, you wanted to watch James's videos, So the reality is this: being bullish and being bearish is dumb. It's dumb. Marrying a bias is dumb. I was dumb for doing it. At the end of the day, just trade the chart. That's it. Trade the freaking chart. Right now, this is a range. It's not bearish. It's not bullish. It's a range. It's moving sideways. All right. Maybe on a smaller time frame you can find a long or a short, but I'm talking about on this weekly chart. It's just a range. Okay. So my opinion of Bitcoin is the same it's always been. I think Bitcoin is a speculative asset. I think Bitcoin is a growth asset. I think Bitcoin is correlated to the stock market. Last month when stocks went down 7 or 8%, Bitcoin went down 25%. Stocks started to rebound in October, Bitcoin went up. I think it's a growth asset. I think you can make a lot of money if you're smart and you play it right. I also think it's extremely risky, and I would never in a million years tell somebody to invest their life savings in it. A friend of mine that called me on the phone yesterday or the day before, I don't remember now, right, was telling me how much money he had, and I said, look, if it was me and you absolutely want to be invested in Bitcoin, and I'm talking gun to your head type of stuff, maybe 5%. Maybe 5% of your retirement, And he had a good retirement already, So this isn't a guy that's got like $5,000 and 5% is going to be nothing. And this is a guy who had, quite a bit of money, and $5,000 was going to be a substantial amount of money. And that's the way I feel about it. What a lot of people don't understand, I know this video is really long, but look, guys, you will have people, okay, who are trading crypto who start out with 5 grand, 10 grand, which is not chump change, but it's not a lot of money. It's not like, oh my God, money. And they'll start with 5 or 10 grand and they will turn that into 50 or 100 grand. But instead of cashing out the 50 grand or the 100 grand, they will go, yeah, but I want to make $1 million or 2 million or 5 million or whatever the goal is, right? And then they'll lose all of that money and they'll be like, oh, well, it sucks, but at least it was only profits. Or, well, it sucks, but 50 grand is not life-changing money. Yes, it is. That's what people don't get. Let me show you something. This is a compound interest calculator, okay? Let's say that you made 50 grand out of 5. Let's say that you're 25 years old, for example. And you've now got 50 grand. Let's just say, for simplicity's sake, you got 50 grand after taxes, okay? If you took that 50 grand out of crypto and you put that into standard index funds in the stock market, all right, we're talking SPY, we're talking QQQ, we're talking, the DIA, right? These index funds for the major, like Dow Jones, the S&P 500, etc. If you put it in there, the average return over the last 90 or so years has been about 10% per year, okay? And if you left that in there from 25 until retirement age, which right now is 67, you would have had that in there for 42 years. You want to guess what that would be worth in 42 years? $3.2 million. Meaning that your retirement would basically be taken care of. That instead of having to invest 10 or 20% of every paycheck, you could just live off that money and enjoy that money. Or you could invest that money too and get even wealthier. Point being, $50,000 is life-changing money. Most people do not retire with $3.2 million. Say you only made 25 grand, right? $1.6 million. And again, this is assuming you're 25 and you retire at 67. Right? Obviously, these numbers change. Like if you're like me, you're around 40 years old and you're retiring at 67, you'd have 27 years. So if you got 25 grand at 27 years at 10%, right? A lot of assumptions here, obviously. But there you go, $367,000. These are huge numbers. Most people never have this type of money. Most people retire and live off of Social Security in the U.S. I don't know what people do in other countries. I don't know what they have as far as their social systems and safety nets. But even, $50,000 for 27 years, $700,000. These are life-changing amounts of money, but nobody thinks about it because all they're thinking about is, yeah, but I want to get $1 million this year. I want to be a millionaire by December. I want to be a millionaire by 2022. All right, so I am shooting an ending to this video because yesterday when I was shooting it, I had some company and the video got interrupted and I wasn't able to finish it. So I wanted to sit down today and finish this. It was getting long-winded anyway, so, probably a good thing. But long story short, guys, make sure that if you have spare money sitting around, if it's spare money that you can truly afford to lose, consider the idea of having some bids, some lowball bids on some assets that you wish to own. You never know when, there's going to be a flash crash. You never know when something's going to suddenly drop down and then come right back up. And I have bought, dozens of coins this way that I was able to get out of. In fact, I don't want to plug it because it's not for sale anymore, but I had a software that literally used to do this for people. And the entire purpose of the software was to catch these flash crashes. So maybe one day I will bring that back. People made a lot of money with that and they were very happy with it. And then I stopped selling it to focus on other things. And the bear market hit. The bear market, coin would drop, super fast. And then instead of going back up, it would just keep dropping. So that was a big reason that I shut that down as well. But it's really simple. This is obviously the news around this. Bitcoin flash crashes to 8,000 on Binance.us. And the other thing that I wanted to add into this video, because it came up on my Facebook, somebody asked, how can you protect yourself against this? What if you were on the other side? What if you got stop loss hit and you had to stop? Let's say you had $65,000 Bitcoin and you had a stop loss at say 64,000, just a random number, and let's say that it was a regular market stop loss, you might have accidentally sold Bitcoin for $8,000 and lost enormous amounts of money. So how do you protect yourself against that? Boy, these new Brave ads, I hate these. I'm going to stop using the Brave browser if they don't do something different with these ads. How do you protect yourself? Well, you use stop limits. If you're going to trade on a site that has low liquidity, especially, right, like Binance.us, make sure you're using stop limit orders. Because if you have a stop limit order and say it says, hey, if Bitcoin goes under 64,000, sell it, what you can really say is, if Bitcoin goes under 64,000, sell my Bitcoin for 63,000 or more. And then the least it'll sell for is 63,000. If you don't use a limit order and it goes and hits your stop, it'll sell it for whatever the market is. And so there are probably people out there, unfortunately, I made a lot of money off of this crash, but there are probably people out there who unfortunately lost a lot of money because trading is a zero-sum game, okay? And the other thing that I wanted to mention real quickly is several people have asked me, how did this happen? How does this happen? Well, Binance is going with the story that there was an institutional trader whose algorithm suddenly sprung a bug and crashed the price of Bitcoin. Listen, you want my honest take on this? I think there was a big player, a whale, an institution, whatever you want to call them. I think they purposely crashed the price of Bitcoin, and I would venture a guess that they personally had bids down at 8, 10, 12,000, probably 8,000, right? Because that's where it stopped. And I would venture a guess that they filled their own bids. Let's say that you have just $100 million, right? And let's say that you got $100 million worth of Bitcoin, and that hey, I can sell $20 million worth of Bitcoin, and I can crash the price of Bitcoin to 8K or 10K or whatever. Well, what do? You take $20 million and you put a buy order in for $8,000, $9,000, $10,000 Bitcoin, and you sell $20 million worth of your existing Bitcoin. It shoves the price down and you get to buy it right back, only you get to buy it right back for 80% off. And anybody who says, oh, that's not happening, it is happening. It's one of the nastiest bits of markets. And I'm not going to sit here and say it's a crypto thing. It's not. The exact same thing happens in the stock market. Not to this degree. 87% crashes don't normally happen in the stock market. Same thing happens in Forex, right? And people say, oh, Forex can't be manipulated. There's trillions of dollars being traded. That's nonsense. The more that I read up about market manipulation and the way markets work, this is literally how it works. There are big players, and Forex, again, is not 80%, right? You're talking pips, a number of pips being pushed this way or that way. There are big players who are basically, playing games while the rest of us are over here fighting for the scraps from the table. And so it's unfortunate that a lot of people probably lost money, but at the same time, as one of my first mentors ever told me when I became self-employed, don't play games you don't understand. And if you don't understand that this is what happens in crypto and this is what happens in markets, and that there are big players who can use their wealth to push the market where they want it to go, well, then you probably shouldn't be trading, and you probably should just stick to investing, right, where you don't have stop losses. But at the end of the day, this is a very simple strategy. And I talked to a good friend of mine yesterday after I shot that video, and he's like, dude, you keep calling this luck. He's like, this is not luck. Number one, it's a strategy that you figured out. Number two, how did you know where to put the bids? And he's got a point. I do consider it mostly luck, but you do need to know, where are the obvious areas of interest. And so that's why I have bids all the way down to 7,000, and I didn't have all my money in a $1,000 bid, which wouldn't have got filled, right? You've got to use a little bit of common sense about what would make sense. Where would this go if it crashed? And the funny thing is yesterday, after my bids filled and then the price went back up, I tried to go into Binance and set more bids, even lower, and it won't let me. Binance US only lets you set bids so low. It was like 12,000 was the lowest I could set them yesterday. So the only reason I was able to get these bids in for where they were at is because I put them in so long ago, right? These bids have been sitting there for literally, probably 6 to 12 months at least, if not longer. I don't know exactly when I put the orders in. But Bitcoin is obviously much cheaper when I put them in. I can't emphasize enough how simple this is. And this is something that somebody can do without trading full time. You can have a regular job or a business or whatever, and you can put these bids in. If you got money that you're spending and money that you're not using for anything, what they call dry powder, if you will. There you go. It's that simple. All right. So with all that being said, I'm not going to go back into a Bitcoin chart because I know it's a day later, but the video is already probably 40 minutes long, so it's a crazy long video. I am going to wrap up there. I do hope you got something out of this. I hope that you'll take this strategy in the future, and I hope it does very, very well for you. There's plenty of, if I had a huge channel with, 1 million subscribers, I probably wouldn't share this because, obviously there's only so much liquidity and I don't want people taking liquidity away from me. But, my channel's a small channel, and so I don't mind sharing this stuff with you guys and girls. All right? Hope you enjoyed it. Please remember, as always, I'm just some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, or precious metals. If you enjoyed the video, make sure to give it a thumbs up. Make sure to subscribe to the channel. And if you'd like to support my efforts, check the description. There's a link down there where you can join Patreon for just $7 a month. This is James with Crypto Common Sense reminding you to please trade safe.